Alrighty guys, what is going up? Welcome back to the Best Investing Money Management channel on YouTube. I am your host Carter, and in today's video we are going to be talking about why I just bought over $5,000 worth of ticker symbol SoFi. Now, for those of you that don't know what this company is really just a money management app and website. It's very similar to like a Robinhood or a company along those lines, but they have a lot more stuff. You can have different personal loans. You guys can borrow money. You can have personal loans. You can even have home loans. They have a spend credit card. They have an investing feature, automated accounts, retirement accounts, crypto, fraction shares, ETFs. So honestly, this is a pretty cool looking app. But one thing, anytime you guys invest, what is some key things you guys want? You want growing sector, which is fantastic. You want a company that has pretty high margins. And this company, for those of you that don't know, it's not profitable. So their margin is obviously they're losing money. Okay. But the thing about it is you always want a company that can have higher margins. And that's what they're working on. Not to mention, you want a company that's growing in revenue. And you guys can see, SoFi, I think it's SoFi, they grew their revenue by 151% in the last quarter, and forecasting a 58% year-over-year growth for 2021. I think, guys, that would be absolutely fantastic. I think this company is really, really interesting. I love the product. It's a company that I would use, but let's break down the chart. Okay, one of the main reasons why I honestly bought this stock is because you never want to buy up in here at this red line. This red line really represents a resistance line. So this is like the highest point that this stock has ever been. That wouldn't make any sense, right? Another resistance is right here at around 24. So now this is when we're getting tendencies to see sell off at that price action. So it hit it there, we had sell off, hit it there, we had sell off, there, and then now, when do you want to buy a stock? Do you want to buy it all the way, up here? Absolutely not. You want to buy it as cheap as possible. So this right here is what you classify a support line, right? So this means every time we've seen this stock come in contact with around $14 to pretty much $15 a share, we've seen a lot of buying pressure enter there, okay? So it came in contact 1, 2, 3, 4, 5, 6 times, okay? And every single time we've gotten a lot of buying pressure at that zone, which for me, that represents a very strong support. So now when I'm buying this stock, I understand that I'm not going to be the only one buying this stock, okay? You want people that are also going to be buying it because then you'll have that price action move it up. You also want people looking at it and trading it and talking about it. So looking at the volume, you guys can see when this stock first came out, we had this huge move. Really went from $11 all the way up to about $22. So it almost doubled, and then it doubled within the next couple of days after that. Okay, so volume is key. Okay, so look at this. Before, it really wasn't moving in here, but the second we had a huge volume spike, also the price spiked up, okay? And then it sold off, and same, that's what the stock did. It sold off, okay? But recently, we've had a lot of buying pressure and a lot of volume start entering this stock just like it did back in here. So one, I think that the stock is pretty undervalued just because of the overall growth we've seen from it. And I think it's right on a support line, so it would be a perfect opportunity to, one, buy in on a discount. 2, this could be a possible swing trade move. And 3, this would be a great stock, a great growth stock to hold for the next, 5, probably about 3 to 5 years, to be honest with you. I think that was a very fair expectation of this stock. This is a fintech stock. It's not going anywhere anytime soon. It has great cash flow, great balance sheet. One thing I couldn't really find, which is a key thing, is the long term debt. I'll show you what they said, because the reason why you always want to make sure that a company doesn't have a lot of long-term debt. The reason why is if that's just say this company slows down, they need debt to get, or they need cash to get through a hard time. But if they have to take on debt, that overall dilutes the company and makes it worth less. Very similar situation as Ford. Ford brings in billions of dollars, but yet they have 160 billion in debt. That dilutes the company a lot. So I really think that this one definitely carries a lot of long-term potential. And for me, I think that this is a perfect opportunity to buy right here at around $16. I think this is a perfect undervalued play. You even can dollar cost average this one. I think that this is a great investment for the next 3 to 5 years. And if you're going to swing it, set your stops right below like $13 or $14. The reason why is because it's never broke from that point. So I think that that would be a great swing trade and with a great risk and reward. So that is it though. I hope you guys enjoyed the episode, and if you did, hit that like button and subscribe. We will see you guys later. Remember to stay happy, stay positive, and stay safe out there. Take care, everyone.